very close to the end of another week. Time for us to start. I sent the link on the Telegram channel so everyone can join us there. Now, we just had the Eurozone, German, and the UK PMIs. So we had Eurozone PMI, we had German PMI, and we had the UK PMI just now. And we're going to still have some more PMIs from USA at 11:45 tonight. Just remembering that this is Australian time. Okay. Therefore, need to be looking at your time zone. Now, let's have a look on the numbers we just got. Yesterday, we didn't have much. We had the CPI for the UK that came in higher, and the RBNZ interest rates decision that, as expected, came in as another pause, right? So nothing too crazy in there. So the CPI month over month came in higher than expected. The year over year came in higher than expected, and the PPI input, that's the producer price index input, came in at higher than expected as well, but was revised down on the previous. Okay. One thing that it's worth mentioning here is that I've mentioned that on YouTube. Okay, I've mentioned one of my videos on YouTube. So if you're not watching the videos on YouTube, you're wasting content. Right? There is lots and lots of good content going out there daily. All right, we do work a lot for this, so make sure to subscribe to the YouTube channel. So we had the CPI predicted to be 2.1% as the year over year, but the previous was 3.2. So coming from 3.2, let me grab my pen here. So coming from 3.2, that's the previous, to 2.1, 2.1, that's 1.1 of a difference. Okay, 1.1 of difference. This is a lot, all right? For 1 year to another, coming 1.1% down of inflation, it's a lot. But they did come 0.9%. So they come from 3.2 all the way down to let me grab, to 2.3. 2.3. So this is 0.9% of a difference. Okay. So this is good. This is good. Inflation is heading down on UK. Now, it came up higher than expected. Okay, so therefore it made the pound stronger. All right, so we need to know how to work on these circumstances. All right, because the pound did get stronger. Therefore, we need to know that why. And the reason is the 2.3, it's higher than the 2.1 predicted. But remember, guys, it's too high. Okay, but they are very, very close, very, very close. We can see that it's 2%. All right. Then we look at the actual where we are, it's on 2.3. So that's really, really great. They're doing a really, really good job. Still sort of high, 0.3% high, but it's good. It's fantastically well. Okay. Now they've probably being the first one on controlling the inflation. That must probably will be something good. Okay. Then today, we had just now the just this morning, the core retail sales and retail sales for New Zealand, higher than expected. Okay, so this is prompting inflation in there. So just make sure to watch out. As well, the big set of data, if my computer moves, it's not moving. Okay, there we go. I think I know why. I'm just going to stop this for a second. Okay, that's good. So if we look at the French manufacturing PMI and the Services PMI, the manufacturing PMI came up good. All right, so 46.7 from the 45.8% expected. The Services PMI was 49.4 from 51.8 expected. So that's not good. So that's not good, came in below than expected. Then we had German manufacturing PMI, on the Eurozone. That was both of them really, really good. So 45.4 from 43.4 and 53.9 from 53.5 for the services. So this is pretty good. Okay, this is not bad. This is very, very good. And then we got Eurozone Manufacturing PMI, good as well, both of them. And we have, the Services PMI wasn't that good. And then we had the Composite, then the Manufacturing PMI and the Services PMI for UK. Not too good, not looking too great. Okay. Now, if we look back, we can see the pound. Let me grab GBP USD here. As I've just mentioned, GBP USD, there's a big chance of this coming down, all right, coming lower. So we may probably see this retracing back down somewhere around those levels first. But there's not much targets up here, as we can see. This target have been, oops, sorry, this is in black. Let me put in white. This target have been hit here. This one have been hit here and then pull back, and then just now an uptick, and probably we will be coming lower, somewhere around those levels here, probably even like here, but that's a long-term target. But still, there are potentials to do that. Okay, so just make sure to be watching the pound today and tomorrow as well, because tomorrow, and look at euro dollar. Euro dollar is going up. If we have a look at the euro dollar chart, euro dollar did had a bit of a reaction. Sorry, bit of a reaction here on the lows. Okay, but maybe we can see euro dollar coming down at this level here. Okay, at this level here. But anyways, because we did add some sort of mixed data coming from 53.3, still not too bad. It's not a big miss, 53.6 to 53.3. That's not a huge miss, but still lower than expected. Okay, and the manufacturing PMI came in much better than expected, nearly 1%, 1.2% higher than expected. And then for today, still, we're going to have the manufacturing PMI and the services PMI. Manufacturing PMI is expected for US, expected 50 from the previous 50. So basically no changes. So if it comes lower, this will be very, very bad, because they're expecting no changes from the previous, and the previous already didn't change. So if it comes lower, this won't be good for the US dollar. Okay, we're going to have a look later on the US dollar index. And let me just get this sorted out here. Okay, done. So, and the services PMI as well expected to decrease 0.1%. So that's not much, but still, okay. And then tomorrow, oopsie, tomorrow we're going to have the CPI and the core retail sales, German GDP. Sorry, not the CPI. Core retail sales and German GDP for euro and for pound. All right, and that should be it for the week. Now, if we look to the core retail sales here, we can just come back to the news, to the release we got today from the services, and we can see that the services are not actually going too well. So most probably food outside home, that it's one of the measures from the retail sales, will be bad, okay? Because look, restaurants, those types of things, they will probably not be selling too much. So therefore, I'm not believing on a better retail sales for UK. Okay, German GDP probably coming as expected. We have to check again today's manufacturing was good and services was good. So probably this here, this negative, where is it? This negative 0.2% here can come a bit higher. Okay, can come a bit higher on the German GDP year over year. And the quarter over quarter most probably will follow the same thing, same line. Euro dollar is going up to retrace 61.8. That is a possibility, Zodwa. Sorry if I pronounce your name wrong. but I think it's okay. I think it's correct, but you can correct me if I'm wrong. I don't mind. But yeah, thanks for the chat. So yes, most probably euro dollar is retracing back to 61.8, probably on the up move, you mean, right? And then continuation to the up move or to the downside. Okay, so coming back to just drinking some water. I don't know why, but my throat is so dry in the last few days. Anyways, so that would be it for the week. We only have the GDP. We did have the GDP, the manufacturings today, and then the GDP tomorrow. Now, let's have a look on the charts. So let me take this off, and let me take all of this drawing off as well. Actually, let me come back and see. Okay. You pronouncing it right. Yeah, so Zod, what do you think Eurodollar is going down or you think it's going up? What's your take on that? What do you guys think about Eurodollar? Because if you're saying about the 61.8 retracement, then I'm assuming you're talking about this retracement here. That's too many lines. I know. Let me take these lines off. So if we do this, oops, if we do these, you may be talking about this retracement here, or you talking about this up retracement here to continue to the downtrend. I'm just curious to know. But I'm looking at these levels of interest on here. Okay. So maybe this level of interest will be a good target if we break down these lows here. The up retracement to go down. Oh, okay. Okay. So we are pretty much on the same lines. Let me draw it for you here. From here to the down. Yeah, that could be an option. That could be an option. That could be an option. Down, up, down here. If we do the projection, so let's say that this is the top of Eurodollar. Okay, let's say that this is the top. If we get a Fibonacci projection, we can just from here to here to here, and the target would be around here. So yeah, it's pretty similar of what I'm looking at as well. Now, let's just break down what's happening technical wise here, because Euro PMIs came much better than expected, guys. So we can't forget that. All right. So it is good. It's really, really good. And Euro is really, really strong at this moment. And we can see that right at these two spikes. So I wouldn't look to be shorting. That's my personal opinion. That's on my own portfolio. I wouldn't be looking to short Eurodollar for the whole month, next month, because it's still very strong, and we just saw that now. Where is it today? Sorry, my throat is again. Just a second, guys. So yeah, so as I was saying, guys, the Eurozone Manufacturing PMI and the Services PMI, the Manufacturing PMI came higher, the Services PMI came lower, but again, it's very tiny bit. So still, Euro is still have a bit of strength. Let me check on my system how this is going. Just a second, let me load it this again. All right, the euro is on. Yeah, see, pretty much we started the week on the 20, so 20, yeah, Monday. We started the week on the exactly same spot where we are right now. So not much, oops, someone want to join us? So not much of a big move, all right? We went all the way up to the 21st. So 21st, 21st. Yeah, so we move all this way up. And then after that, we just went all the way down to the 23rd. So all the way down here. And euro is getting stronger now. So we may have a possibility, all right? We may have a possibility of a continuation to the uptrend. But before, I do believe as well on this down move here to a continuation to the upward. But look, lots of people are talking about the 112, if I'm not wrong. 110, sorry. 110. So 110 is a bit far, but still a very good possibility, okay? So just be in mind, guys. Just bear in mind that there is room. There is room for euro dollar rebating up again. Now, pound dollar. Pound dollar, I'm looking at pound dollar to the downside. I don't see pound dollar going up as euro dollar, okay? This is just me on my analysis, on my strategy. You need to double check with your strategy what you're looking at. But for economic wise, we just had the UK we just had the UK PMIs, and it's literally not looking good for them. So if we think about it, right, if we just stop and think about it for a second, the currency would be very affected, right? So when we have something like that happening, something of this milestone happening, most probably the currency will be affected in the next day. So like today will be a surge, and tomorrow with even more data, we may have a even more affected. So let's have a look on the pound strength. Look, pound strength was completely the opposite of the euro strength, right? We started the negative way. We started on the negative territory, came all the way back down to 80. And then now we're grinding lower. But then yesterday we had a higher CPI. And then now a downtick. But look at how the CPI moved the market. The CPI move, where's my pen? The CPI move is a completely different move of the PMI. Look, it's like 1/3 of it. All right. It's like from here to here. So 1, and then another one, 2, and then another one, 3, and then like another one. So 4. So 1/4 of the CPI. So that was CPI strength. And this was PMI strength. Oh, sorry. So that is scary, isn't it? Because if PMI was much better, and it didn't move that much, if we go back to the chart, this was PMI. All right, this move here was this move here was the CPI, and then this move here that is going right now is the PMI. But look, we had how much points? Let me take this off from here. We had 51 pips of move on the CPI, and we had half of the move, 30 pips on the PMI, and the PMI wasn't that too bad, all right? So look, I think looking at the GBP USD, most probably we will have a retracement downwards, okay? Somewhere around the lines that I was saying. Not for this week, nothing crazy for this week, okay? I don't think this will like whoa, like so much, like whoa. No, I don't think so, because That's not how the market works. It could, all right, it could. I'm not saying it couldn't. I'm not saying it couldn't. Let me just do a quick maths here, guys. I'm just looking for one of the trades I have here. I'm just managing it at the moment. So 160. I'm just managing it. Just a second. Okay, that's not worth it. I'm just looking at just managing some trades here on my personal account. It is what it is. Okay, so this is my view for euro dollar and the pound dollar. Okay, and now moving to gold, we did see a big drop. Let me check these drawings off. We did so huge move, a huge move on the pound. Right, so I don't know about sorry, on the gold. I don't know much about if that retracement will continue to go. But look, I'm very suspicious to say that there is maybe a probability of a retracement around this area. All right, the 2,300, if we want to call it on the the even number, 2,300 over there. I even think it's too much, 2,300, maybe 2,320, 50, 2,350. Oopsie. Why did he go? 235. Nah, 235. No, I want somewhere around 332. Yeah, more like that. Maybe around here. Maybe we can have a retracement on gold around these levels. All right. Not looking too good for gold holders at this moment. One of my friends, Harry, is a big position holder on this area. So he's still holding this position. He longed it since here. So that is a huge position, 17%. That's awesome. On top of leverage, that can be very good. So my opinion is that gold can retrace. Okay, gold can retrace and it can retrace a bit further. All right, so let me put in a 4 hour. Look, I'm not saying that go down, or I'm not saying this because it did actually broke the highs, the all-time highs, okay, here. But every time that gold breaks all-time high, what happens? It goes down. All right, and this is exactly what we're looking at this moment. I'm not gonna lie, I was long on gold. I took a loss, and it's completely fine. You just need to know to manage your risk. If I was still holding this position, I was gonna be crying at this moment. All right, but I know that okay, scenario don't look good. We're gonna have lots of news tomorrow. This was yesterday, and then therefore I'm gonna close my positions. All right, so on an easy way, I've saved myself of a couple $1,000 of losses. All right, so just manage your risk properly and have a good strategy. I've gave it up my strategy already for you guys. So I'm not saying that you need to follow because that the strategy I gave to you all, there's completely different ways of understanding that strategy. So just make sure to read. There's a lot of reading on YouTube, on Google. You can have so many videos on YouTube. You can learn from other people. So the Google is basically an ocean of content. There's good content, there's bad content. So you just need to know how to find the good content. Okay. And look for economics. The first thing is economics. There is one website that I want to find out. I need to find this website. I think I have it on my phone. So just a second. I think I've sent to one of my friends. I think I have this link. Just a second, guys. Let me check. Oh yeah, this is it. Courses, Lumen Learning. Okay, courses. Where's the Google courses? Lumen Learning Macroeconomics. This is a really, really, really good course. Simple book production. Yeah, this is it. Guys, this is awesome. All right. I know it's a lot of reading. It's so good that I've printed all the books here. All right. Let me get it to you. Wait, it's stuck it. Oh, okay. So where's my camera? Oh, it's blurred my background. Let me take my blur off. Look, it's all here. All right, it's all here. I've printed everything. All right. So it's really, really good book. I have thousands of those books here. I have another one here. This is huge one. This one, macroeconomics. All right. I got like so many things. All right. So many things. It's a lot of content. So, but this is it. This is what you need. This is what you need. I know it's painful to read these. What? It's like what? 140, 150 questions, something like that, pages. But still, this is what you need. You only will understand the things if you read it. Otherwise, you're not going to understand the things. And the easiest way, and it's free. It's free. It's literally uni type of thing. Okay, it's literally macroeconomics course, top tier, A to Z. All right. So you have everything here. So you have course content about this course. So basically, you can have a look. You have the measuring. You have patterns of unemployment, aggregate demand, aggregate supply, and these all basically can fit on the forex market. So basically, this is it. Look, module 1 discussion on assignments 1 discussion. Is economics a science? Economic thinking, making irrational choices, everything is here. Just go for it. All right, just go for it. I know it's a lot, but it's all you need. All right, I'm gonna send the link on the Instagram. Sorry, on the Telegram. And I'm gonna send the link here on the chat as well. Course of macroeconomics. So as soon as you click on here, let's say if you go for module 1, choice in a word of scarcity, it's going to be here. So it's basically a page, all right? And then you go on next, and then next, and then you have it here, and then next. It's all here, all right? So it's all here. Good. Okay. Coming back to the chart. So yeah, so talking about gold, I think there is opportunity of gold getting a little bit lower. Not that much. I don't think it will break this area here. Okay, I think that's too much then. Could potentially do that, yes, but not too keen to believe on this speech by other people. All right, maybe it even come here and retrace up. So yeah, there is opportunity. Okay. Now, do you guys have anything you would like me to talk about? Because this is pretty much it for the week. It was a very slow week. We didn't have much happening around. I've covered the major space, Euro dollar, Aussie dollar, gold as well. We've talked about the macroeconomics on UK, on Euro. So if you have any questions, please send it to me right now. I'm going to drink a bit of more water. No one have questions? No one have questions? All right, then I guess this is it. I think next week we will have sorry, next week. Next week we will have a little bit of more things. German CPI on Wednesday, on Thursday we have GDP for US, and then on Friday we have French GDP, Eurozone CPI. So yeah, it's gonna be very slow week again. But take a look at what is the relationship between bond and the dollar. Okay, so if we get, oopsie, if we get to the US dollar index, okay, okay, here, actual action starts after 2nd of June. 2nd of June, that's correct. That is correct. That it's actually not next week, after next week. You're right. So someone asked it, what is the relationship between the bond and the US dollar? You mean the US or you mean other currencies? Just so I can explain a bit better for you. If it's on the US you're talking, so there are a few things we need to pay attention, okay? One of them is the interest rates and the yield attraction. All right, so higher treasury bonds yields, basically when the yield on the treasury bonds increase, it often makes them more attractive to investors, of course, because more people want to have money there and have and get money on their bank account, right? These will generate capital inflows. So this will attract the foreign investors looking for better returns, which leads to an increase on the demand for the US dollar and making the US dollar an appreciation of the dollar. All right. So basically, it will be higher after a few days, a few weeks, because more people will be willing to have that. All right. Second is the safe haven. So during periods of like global instability, like the economic uncertainty, or maybe global wars, or some of those things, uncertainty, I would say, or even financial volatility, even if the market is too volatile, even the VIX, that's the scary index, if it's too volatile, investors often seek a safe haven. And the US Treasury bonds are considered one of the safest investments due to the low risks that they have to the default. All right. The third thing is the monetary policy, of course, that we all know that it's tighter monetary policy that's basically raising the interest rates, generally leads to a higher treasury bonds and a stronger US dollar. And then we got the inflation and inflation expectations. That inflation expectations will influence the treasury bonds. When the higher the expected of the higher the inflation expectation will lead to a higher yield, because investors demand more compensation for that risk, for eroding value of the money. All right. So everything on the economy works very, very tight. Now, answering your question, how can the relationship between the bond and the T-bond, the treasury bond and the dollar, it's pretty much if the treasury bond is going up, therefore the US dollar will go up as well after a few days. But this is not a rule of thumb, okay? Don't get me wrong. Sometimes it can happen the opposite, as we just saw this year happening, last year happening, okay? So we have the US 10 years here, and I can put the GXY on top of it. So you can see that it's exactly the same, right? So the US bonds is on blue. Let me just change it. It's on blue, and the DXY, it's on orange. And you can see that it's like 80% exactly the same. All right, so it's very, very interesting how this plays out. Most of the time, very, very similar. Okay. All right. I hoped I answered your question. No one have any more questions? Oh, my water just finished it. All right. So if anyone have questions, if no one have questions anymore, then I think we've come to an end of another week. Not a problem, Yenemu. you're more than welcome, my friend. So have all a great weekend ahead, and I catch with you guys tomorrow on the video or next week on the webinar Tuesday. All right, so register yourself already and be ready for that. All right, guys, have a good weekend ahead, and we talk to you on another day. See you. Bye bye.